Okay, good afternoon, everyone, and welcome to this API Chronicles live stream hosted by Marqeta. My name is David Woodward, Senior Partnerships Development Manager here at Marqeta, and I've got the pleasure of moderating today's discussion. We've got a great topic to discuss today, which is the financial attitudes and habits of Generation Z. So for those of you who don't know, Generation Z are people born between 1997 and 2012. And they're classed as digital natives, which means they've grown up with the internet and mobile phones. So in today's live stream, we'll be exploring Gen Z's unique approach to saving, to debt, to investing and financial literacy. Our panel, who we've got here today, will discuss how Gen Z's saving habits are influenced by digital solutions, while their perception of debt is shaped by concerns over student loans, credit card debt, and renting or buying a property. And of course, we'll discuss the role of technology, including the dreaded social media, in shaping Gen Z's financial behaviours. So to discuss all of these topics, we have an expert panel lined up for you this afternoon, including, I'm pleased to say, representation from Gen Z. So joining us today, we have Nicole, we have Marta, we have Ben and Elisa. Guys, can I ask you to introduce yourselves and tell us a little bit about you, your current role and experience to date, starting with Nicole.
Hello, I'm Nicole. I'm the VP of Product at Chip, which is a savings and investing wealth app. I've worked in the product space for quite a while now, but previously in the travel industry before moving over to fintech. And just like the world of travel, the world of fintech has really changed savings and investing habits for the better, especially for the younger generations. So very excited to be here today. Thank you.
Thanks, Nicole. And Marta.
Hi, everyone. So my background is in strategy consulting across different industries, from the tech sector to industrials and financial services. At KAE, I help companies solve problems and challenges and identify opportunities for long-term sustainable growth with data and market research. I'm championing a number of internal initiatives. So one is sustainability, another one is Gen Z. And today I'm going to share some of the insights from our latest segmentation study. Really excited about that.
Yeah, we're looking forward to it. Thanks, Marta. And Ben.
Hello, everyone. So my name is Ben von Berenberg. I am a colleague of Marta's at KAE. I have worked as a consultant there for a little over a year now in the payment space. And similar to Marta, I have helped companies overcome challenges and develop solutions within the payment space through research. So yeah, excited to be here.
Great. Thank you, Ben. And last but not least, Elisa.
Hi, everyone. My name is Elisa. I'm 18 years old, and I'm currently an intern at Marqeta with the marketing team. And I'm working with David. So thank you guys for having me here.
Nice, pleasure. Good stuff. We're also expecting Kat as well. So Kat is having a few technical problems, but may drop in to join the panel. So great. So I think to help guide the conversation today, Marta, as you mentioned, KAE have done a study on Gen Z. There's a few slides that you're going to walk us through to help shape the discussion. So let me bring those up so we can all see them. There we go. Perfect.
Thanks.
So I think we're going to start by getting to understand the different financial personas of Gen Z. So Marta, I'll hand over to you.
Yeah, thanks, David. And I think you can move already to the next slide. So I was mentioning we did this segmentation study recently because we wanted to understand, we wanted to help companies understand and innovate effectively for this generation that is becoming more and more an important customer segment as they enter the workforce and become financially independent. And a lot of the research and data that is currently out there treats this generation as a homogeneous group and tries to find differences with previous generations, which exist, but that's not the whole story. And we have identified 4 different personas. They are distinct, but not mutually exclusive. So Ben and Elisa may identify with one primary persona, but they recognize themselves in characteristics of the other personas. They have different needs, requirements, and this is important for companies because a blanket approach to product development or marketing messaging is not going to work for everyone, and it's going to miss a large part of this population. So very briefly on the characteristics of these personas, the largest group is called, we call them ethical explorers. It's just under half of the population. They place a lot of importance on the sustainability aspect of the products that they choose, including financial products. And it's important for them to invest in companies and work with companies, or use suppliers that have values that are aligned to their beliefs, and the actions are also reflecting these values. They tend to be good savers and are fairly confident with managing their money. The second largest group, a third of the population, they are called stretch spenders. They already have a quite high level of debt for their age. And this is because they tend to be heavy users of credit solutions. They also tend to have low income and are quite financially anxious, and they have low savings. Then there is a small group called energized entrepreneurs. They're just about 10% of the population, but they're very interesting. They're very ambitious financially. They may have a side hustle. They may want to set up their own business. They have a quite nice income, disposable income, and annual savings. They have a nice wide portfolio already, financial portfolio. And then the smallest group, sluggish starters, they tend to be the youngest part of the population, unemployed, either looking for their first job or traveling a year before deciding to look for a job, and they are at the moment the least likely to save and less interested in. They don't have immediate financial priorities. If you can move to the next slide, just briefly want to give an overview of the saving attitudes of Gen Z. So as a generation, they actually have a high propensity to save. We found out that 9 out of 10 actually save. What is interesting, though, is that while saving accounts are the preferred method, and that's where most of the saved money goes, there is still a lot of money that is either left in the bank account or even saved as cash. The least inclined to save are stretch spenders and sluggish starters. And as I said, because stretch spenders may have debt as a priority, they need to pay off debt, while sluggish starters are not particularly interested in that. And at the bottom, you can see how the annual saving varies. So we go from £200 a year for stretch spenders to slightly higher for sluggish starters. But then when we move to ethical explorers, which are the largest part of the population, we already get to £500 to £1,000 a year. And then energized entrepreneurs, actually the 40% of them save between £1,000 and £3,000 a year, and 10% even £10,000 a year. So very interesting segment.
Cool. Interesting. And Ben, Elisa, to put you on the spot immediately, as you kind of look at these 4 different categories here, how would you class yourselves? Where do you see yourselves sitting out of one of these 4?
I'd say I'm an energized entrepreneur. I think I'm quite keen on saving, both in cash and online. So, yeah.
Nice. And Ben, what about yourself?
Yeah, so I would say I probably fit the most into the ethical explorer group. So while I do tend to value saving quite a lot, I don't put it as a focal point of my day-to-day life, and I might not use the same sources as mentioned by energized entrepreneurs entirely. Yeah, definitely some bandwidth into other categories there, but definitely ethical explorer primarily.
Cool. Good stuff. And we'll dive into a bit about how you go about kind of looking for financial products and services later on. So we'll bear that in mind, that Ben's an ethical explorer, and Elisa, you're an energized entrepreneur, one of 10% of the population then. Elisa, you're rather unique, so good work. Cool. So in terms of when we look at Gen Z's saving habits and how they differ to previous generations, Nicole, we'll bring you in here. Any thoughts on that?
Yeah, absolutely. I think that there's a lot of things that are maybe more unique to this generation in terms of their saving habits, but a lot of really positive stuff that we can learn a lot about and like cater to as well. So I would say their saving habits are a lot more ad hoc and maybe less structured. And as an American, I might refer to the American dream, and I would say that that's not as relevant any longer in the behaviors and saving habits of this generation. And so the ad hoc, less structured, it's not a negative thing. It's more thinking about what their more immediate needs are, rather than trying to plan for 65, 70 right away. So access to money is very important. Rather than locking money away for long periods of time. And we do see people dipping in and out of their money, but regularly replacing the funds that they take out as well. So it's not going long periods of time, taking out very large chunks of money, but accessing funds and putting it back, etc. And short-term goals are definitely things that we see people saving towards very regularly, setting themselves kinds of milestones and things that they're saving up for, taking the money out and then setting that next goal. And sometimes not all the money is coming out, but using a portion on it on things, whether that be a few years of traveling, a year of traveling, a month of traveling, whether that be something that they've been saving up for a long period of time. But yeah, it's just very different. You don't have that long period of time where they're saying, I need to put money away for the next 40 years in order to enjoy retirement, that some of the older generations might have started doing, immediately at their first job.
Yeah, makes sense. And in terms of the factors that influence Gen Z's attitudes towards saving money, Marta, we'd love to kind of get your perspective on that.
Yeah, well, definitely high cost of living and high rents, even high house prices, even if maybe it's not an immediate priority, and possibly university fees, they all play a role in affecting the ability of this generation to save. I think I have a slide on this because there are some percentages from the study if you want to move on. So the majority of our respondents had that they can't afford saving because of low disposable income. But there is also another important factor that I was mentioning, which is that, and I think that there are two aspects really. In a way, this generation is a bit more exposed. It's easier for them to run into that because the availability of solutions that weren't available in previous generations. So it's easier to spend money that you don't have or you don't have yet. And on the other side, we found out that there is a general lack of understanding, not necessarily in all of them, but in a significant part of them, of financial terms and what the long-term consequences of some buying decisions may be. So obviously that is an important factor. And the other one I would say is instant gratification. I mean, Nicole mentioned the importance of accessing money. So that fact of prioritizing getting value now rather than waiting a bit long term, additionally with some uncertainty when it comes to investing and saving, also has an impact on their ability to save. So it's a minority that openly mentions, I don't have the willpower, or I'm not interested in saving, but definitely that instant gratification plays a role in impacting their ability to save.
Makes sense. And for those that are looking to save, in terms of those personas where there is a focus on putting some money away, are the traditional savings accounts still appealing to Gen Z, or are they kind of inclined towards kind of newer alternative options? The newer investment apps, such as where you are, Nicole. So is that the kind of how does the perception of those traditional accounts still appeal or not to Gen Z?
I think appealing is maybe the wrong word, but still very common. So I wouldn't say that they specifically appeal or like are, the tool that everyone would want to be using, but they're so readily available. Most people in that generation, maybe their family set them up their first, current account or spending account, and they stick with that bank because it's easier. Then they might open some more products, but they'll always have that one to fall back on. So I wouldn't say it's appealing, but it's so readily available and so commonly used that it continues to be a strong product in the market. And I think where the new kind of apps and digital products are showing a lot more appeal is that Gen Z is so much more confident and trusting of this digital first interaction that they are much more willing to give it a go. They're much more willing to have it run alongside their traditional bank or savings account. And who knows, one day they might start shifting more and more into this digital product, but they don't mind that idea of having, two running at the same time and have this new digital product be something that they try out and use, knowing they still have the kind of traditional savings account on the side. So really similar to, you look at the numbers of how many of them are using traditional savings accounts. And again, I think that's more based on commonality and availability rather than the appeal of that specific type of traditional product.
Yeah, interesting. So and it's kind of interesting that you kind of have that parents making the original decision on the bank account that you kind of almost kind of stuck with for until you make a conscious decision to change. Perfect. We've got a question come in as well. So and guys, please feel free to send in any questions as you see them. We've got a question here from Daniel that's come in. I'll open this up to the floor. It says, do you have a sense of how the Gen Z segment stacks up against Generation X/millennials? Any view on that?
So I have a couple of comments here. So there are definitely some characteristics that they may change as they grow up, and they may align a bit more with older generations. But there are some really intrinsic characteristic of Gen Z, starting from being digital natives or having a different approach with different products that will always remain and will give them will probably developed in who knows which kind of products if companies listen to this new customer segment. So there's different characteristics that I'm sure will not make Gen Z mature into what Gen X look like. I don't know what Nicole or you think, David.
I definitely agree with what you've said. And I think that the world is changing very quickly, and a lot of things in the market and the technology available changes so much more quickly in this day and age that it's very hard to predict if they'll be behaving the same as Gen X once that time period comes to be. I would say there's obviously going to be some sort of curvature in that direction, but I truly believe that a lot of these attitudes that are ingrained at an early stage in life makes you more acceptable to that change in the future. I think and this is around, maybe changing the products that you use, for example. We see in the older generations, the trying to get to cross-sell them into our products or to cross-sell them into a new bank or a new account is incredibly difficult out of that kind of brand loyalty. And I would say that that's one of the things that I think is a big difference in how Gen Z stacks up against the other generations, is that openness to kind of use a different product if it's better, if it offers a better experience, if it's more aligned with what their interests are and things like that, rather than that kind of epic, I've used it for 20 years, so why would I use something else now?
Yeah, I think you mentioned it, Nicole, in terms of just the availability of products that are out there, like Get Chip, but also I saw in the news this morning Monzo launching a new account aimed at children, 6 to 13-year-olds, a dedicated kind of parent and child account that they're launching as well. So just the availability of those type of products. I'm a millennial, I scraped in by about 6 months on the older end of it. So, but yeah, there was no kind of parent or child accounts available, for my parents to choose when they were setting my first bank account. Whereas, to your point, I think today it's just much more availability of options that are out there. Cool, good stuff. So we'll move on to investing, and so Marta, I'll hand back to you to talk us through some of the key insights.
Yeah, thank you. So if we saw that Gen Z shows generally high propensity to save, the picture is quite different when we go into investing. Only 3 out of 10 invests, and this varies more broadly between the different segments. So among energized entrepreneurs, one out of 2 invests, so 50% is an investor. The percentage drops to 30% among ethical explorers, and then there are stretch spenders and sluggish starters who are at around 1 out of 10. And the reason that the ones that are not investing gave for not investing is that they don't have high enough disposable incomes, or that they lack financial knowledge. And I think this is the next slide. Thanks, David. And then, while among those who are investing, there are still a lot of challenges. The first one is that they fear they are losing it all, or they find investing overwhelming, or they feel that the uncertainty makes them nervous. And even the other reasons, they have some kind of connection with I don't have enough knowledge. And so this topic, and I know we'll touch on this later, about financial knowledge, financial literacy, starting to emerge as a barrier to investing. If Gen Z had more knowledge and understanding of investing dynamics, would probably be more comfortable with the inevitable risk and uncertainty that is associated with investing, and it would be more likely to invest.
Cool. So so a number of barriers here then in terms of that stop people from investing. But in terms of what drives Gen Z to invest and their interest in investing, and how that differs from older investors, Nicole, would love to get your perspective.
Yeah, absolutely. I'm going to go back to what I said before about the long-term dream. I think that that's not as inspiring, and so it is more likely to be socially influenced. So that's whether that's driven by their interest, so ethical kind of investing and green energy and things like that, whether that be gaming, so whether they're in those kind of industries where they are influenced by that area of the industry, etc. And that's almost more than the promise of long-term returns. Obviously, they're still inspired by returns and the kind of like numbers that they can get. But rather than that long-term kind of 20-year vision, it's more about what influences like their life on a day-to-day basis. So we see a lot more people asking questions around ethical investing and clean energy and things like that. Also, this doesn't always translate exactly, because obviously, there are some situations where the impact isn't necessarily understood. So investing in crypto and things that might not be as standardized as the past. And that is maybe a bit more trendy. And so I wouldn't say that that's unique to Gen Z. That is across multiple generations. But the idea of trending and trendy is definitely something that is more commonly maybe influences decision-making in Gen Z. Yeah.
Absolutely, I can certainly relate to not having much knowledge about crypto investing and losing a bit of money. It's not a lot, but got to try these things. Cool. Got a question in from Jazz as well. He says, are there any compelling stats around SNBL stickiness among Gen Z versus millennials? SNBL, is that an acronym anyone recognizes? Jazz, you may have to expand your question. So we'll
save now, buy later. I'm not sure how it compares to buy now, pay later.
Okay.
What we can, So what we can say is that we haven't showed any specific stats comparing Gen Z to millennials. Apart from obviously there is the buy now, pay later is very common among some part of the Gen Z, which is specifically the stretch spenders. That's clearly one of the products that they're more heavily users of.
Thank you. And in terms of the risks of Gen Z's active involvement in investing, Marta, Nicole, what are your thoughts?
I think to what I was saying before, I think without that long-term view, investment decisions might be made a bit hastily or with lack of potential education. I would say, especially with digital first, there is a much more high propensity to look at your account balance every single day and see the changes that you're making and maybe be influenced to make decisions from there, versus a bit more of an old school way of needing to get maybe a document mailed to you every month on how your portfolio is performing, which allows you to maybe not make as hasty of decisions. So I think that is something that I would say is relatively risky, and that lack of education or that lack of that kind of long-term thinking might influence their investment decisions. That being said, one of the benefits of their active involvement in investing is the fact that they invest in things that they're passionate in, and they invest in things that they want to learn more about and that they care about a bit more. And I think that is maybe, I mean, taking away the financial benefit of that, I think that is a great way to educate young people about the world of finances in a way that they actually care about and will keep them engaged and interested in the long term. Again, there are risks involved because maybe that is not the stereotypical long-term way of investing, and maybe you're not maximizing your returns or your opportunities. And that is a constant battle that we're discussing internally around the products we have on offer at Chip. But I think it's a huge benefit for the education of this generation.
Good stuff. Martha, was there anything else to add on this particular piece?
No, not particularly.
Okay, cool. Right. So in that case, we'll move on to financial literacy. So yeah, I'll hand back to you, Martha.
Yeah. So we started talking about the importance of financial information, and especially the awareness that there is a lack of financial knowledge among Gen Z, both the ones that are investing and they're not investing. And actually, we found out that even there is no significant difference in the feeling that they don't have enough financial information between those who bank with the high street banks, the traditional banks, and those who bank with fintechs, challenger banks. And we actually look specifically for that because sometimes the way information is positioned by challenger banks, it seems that there is more available, but it's probably not reaching sufficiently the audience. So there is a lot that all financial institutions can do to boost and increase Gen Z's financial literacy. So in this general feeling of lack of information, where do they search for information, financial information? And overwhelmingly, and this is true across all segments, they look at family and friends or social media. Only the energized entrepreneurs have a more varied approach. They look for more resources, but really family and friends, social media are the main ones. As you can see, financial brokers, financial blogs and websites are really not particularly used. And this is something that obviously long-term is important for financial institutions to build trust and to create long-term relationships. And this is also something to answer the question we had earlier from Daniel. This is kind of a habit that doesn't necessarily is going to change over time. If you learn to self-serve and you learn to use certain sources, you're not going back to what sources your father used to use. So social media really important, connecting also to the risks of that you were mentioning before, Daniel. TikTok especially has emerged as a credible source of information, and this has helped the rise of finfluencers, which are influencers that offer advice and information on various financial topics. They usually do it in informal settings. They use everyday language to explain financial jargon, and in this way they basically become the knowledgeable friend that Gen Z can relate to and trust their advice. A Deloitte study actually found out that 20% of Gen Z have invested money based on social media recommendations. If we think that 30% of them only invest, that means that 2/3 potentially have invested based on social media recommendations. And you also mentioned cryptocurrencies, and there has been a lot of investing in this generation based on influencers or people who position themselves as knowledgeable on the matter and basically guided investing in cryptocurrencies. So definitely a different landscape of sources of information from previous generations.
Absolutely. And Nicole, are there any key areas of financial literacy that Gen Z need more education on?
Definitely. I think that it kind of relates more towards, again, those long-term saving behaviors. I was specifically thinking of pension contributions and consolidation. So the younger generations are switching jobs a lot more often than maybe Gen X and the generation above. And we've definitely seen the impact on lost pensions, not even realizing you've contributed to a pension throughout a job, and then the amount of admin and work it takes to consolidate later on, which can be quite painful, and a lot of providers don't make it that easy. But outside of just pension, there's other financial benefits outside of salary itself that a lot of Gen Z might not know to ask for or to engage with their employer on. And the thing about this generation is if they know what questions to ask, they will ask the questions, absolutely. And so a lot of times this idea of social media influencing is actually a very positive thing, because sometimes it's just, your normal person having a conversation and telling you, have you ever thought to ask your employee about a salary sacrifice? Have you ever thought to ask your employee about these types of things? And so there's a lot of education that is very positive in terms of just getting this generation to ask the right questions, which is great. But this education isn't coming necessarily naturally, due to the fact that maybe the parents' generation didn't go through the same experience, where they probably are more likely to have had one job and worked at the same company for 20 to 25 years, or every year they sat down with their accountant and manually went through all of these kind of outstanding funds and things like that. So there's definitely more education to be had around any long-term financial planning goals, especially those that are related to their jobs. It's interesting, and the social media piece is interesting as well, because we've seen in the news, there's a steady stream of them where particular celebrities who are endorsing certainly financial products end up getting fined and kind of hauled over the coals for promoting something that actually was a bit of a scam. They weren't really digging into what the detail was; they were just putting their name to it. So there's a bit of a, as you say, there's benefits and risks associated with social media influencers and consuming information from that particular source. Yeah, it's actually a good time for Josh's comment here, because I think that there's a big difference between the education side and the actual almost notification side. And this idea of influencers and social media is a really nice way to bring awareness and get these things on people's radar. But I do think the more traditional financial institutions are the ones who have the responsibility to really provide this education and make sure it's accurate. I mean, I'm sure in the eyes of the regulator, they'll be putting a lot more effort into making sure what they say is not influencing people, especially in the guise of consumer duty, to do things that are wrong for them. And so maybe it's the influencers and the social media who can bring these things to attention and then ensure there's the other tools out there to be actually making the right decisions.
Yeah, and as you say, the responsibility of the more kind of traditional establishments, but making sure they're inserting their message into a place where Gen Z can find it, whether that's social media or other places. So they kind of need to make sure their message is heard. I missed Josh's question actually. I don't know if it can flash back up. Did we answer it? The outsized influence of social media versus financial blogs and websites stands out. Okay, yeah, I think we covered.
David, if I can add to this point, just kind of reiterating what Nicole said and adding to that. So they should know, we want them to know, this is why we conduct the studies. And I think that there have been in general about Gen Z, there have been other studies that mentioned the impact, the importance of social media. I think social media should be an entry point, is a tool in the many tools that traditional institutions should have. It should be an entry point to generate brand awareness, to start creating that trust. But then the real education, it shouldn't happen obviously on social media, but on the potentially more traditional channels. What we saw is that there is not, sometimes financial information is not easily available it's not reaching Gen Z, and it's not easily available in format that is targeting this generation. Sometimes is behind premium subscriptions. So maybe you get general information about savings, but things that are a bit more in depth, you need to be a premium customer. So maybe it's positioned for the whole public, but not specifically with the language and the format that is more that Gen Z is more receptive to. And
now would be a good time to bring in Eliza and Ben into the conversation on this point in terms of I guess the consumption, the needs around financial information and the consumption of it. We'd love to get your perspectives, guys, in terms of in the first instance, where do you get your financial information from? Would be really interested to get your view. Elisa, do you want to kick us off actually with that one?
Yeah, sure. For myself, what I know up until now, I've gotten mainly from school and from my teachers and from workshops that my school has given us, from external charities and external people, and also from my family, my friends. So we're very transparent with how much I should save, how much I should spend monthly, weekly, and also social media. I'm on TikTok and Instagram quite a lot, so I just mainly use those because it's so easy. It's part of my daily routine, so it doesn't take away like any time for me to go into something else and search it up. I'm scrolling on it anyways, so I might as well just search up something, and then based on that, my algorithm is based on finance, so I still get informed of new stuff every day. So,
yeah, I was going to say, is it you searching for stuff, or is it actually stuff that's just dropping into your feed based on the algorithm and that kind of thinks what you might be interested in?
It's a bit of both. So there'll be times where I'll be scrolling and I see a video of something like student loans, for example, and I'm like, oh, that's interesting. So I search it up, and then I get off TikTok and I go back on it. The first video that's there is on student loans, and I keep scrolling and it's continuous. So I get informed like that.
Okay, and will you kind of take what you've seen on social media and then go and research in other areas to kind of get other viewpoints or kind of a deeper knowledge, or will you kind of take what you've seen on social media as is it giving you the right level of information that you need?
It depends. Sometimes if I'm not 100% sure on it, I'll ask my sisters or my family, and if anything, if I'm still not 100% after that, I'll search it up and specify my bank after the search bar so that it's specific to me, and even my age. I write a question and then for 18-year-olds so that it's specific to me, so I know what I should be doing at this time in my life.
Yeah, good stuff. Great, thank you. And Ben, yeah, same to you in terms of where you're getting financial information from. Yeah, what are the main sources?
Yeah, so I primarily get my financial information through financial news apps such as MarketWatch or the Financial Times app. So those are two that I use quite frequently. I will occasionally talk about finances with friends and family whenever we believe there are some tips that are relevant to exchange for one another. And I am aware of social media as a platform for financial information, and I do come across it quite frequently because I do use a lot of social media, but it's not a source that I actively use to find information on finances for myself personally.
Okay, cool. And why would you not use social media as much? Why the other sources, the financial apps, etc.?
Yeah, I guess it's a little bit of skepticism on the information. Just kind of, I guess that's just more of a personal matter that I'm just a little bit careful when it comes to that. So it's just in the past, I do have to admit, I got the tips on using financial news apps from friends and family. So I guess indirectly that contributes to that source as well. So yeah, it's just based off of tips I have received from others. I got pointed in the direction of using financial news apps as they were deemed a little bit more credible from their perspective. And yeah, I like to put my trust into them a little bit more as well. I guess with social media platforms, it's a little bit of the lack of knowledge of where the information necessarily comes from. So just a bit of uncertainty on that part from my end is why I prefer not using social media actively for financial information.
Cool. Makes sense. Thank you. And do you think there's anything missing? Elisa, I'll hand back to you for this one, but do you think there's anything missing when you're looking for information around financial services, financial products? Is there anything that you're struggling to find?
I think for me, and where I'm at in my life right now, thinking about student loans and everything based around school, I think I'm not as informed on tax as I should be. And so I just assume that it's not going to affect me when I know it is, because I don't know much about it. I just assume, oh, like it's fine, but I know it's not. So I think being more informed on that is really gonna set me straight and help me understand how to plan in advance and know how much I'm paying of tax and what is going to get taxed and what shouldn't, and if it's normal. I think also savings account. I think I personally don't have a savings account just yet because I tend to save cash. I think being more informed on that and knowing when to withdraw my money, when to actually use it, and if it's just for emergencies or simply because, oh, there's a new pair of shoes that I want, let me just take out money. I think being more informed on that is definitely something that I need to do by myself, but also I think like schools and workshops should offer to students in school right now.
It's a valid point, and like I say, having that understanding of tax, which will, as you kind of enter the workplace and it becomes very real in terms of seeing a chunk of your pay disappearing each month, kind of understanding, is that, to your point, is it the right amount? Why am I paying this? How much should I be paying, etc. is a really, really good point. Ben, what about yourself? Are there any kind of gaps, anything kind of missing when you're looking for financial information?
So I do think that actually finding the information has become fairly easy nowadays with all the different varieties of apps and providers that can give you information on this. But what I have realized is, for myself, that is a bit of a problem, is that on, for example, the websites that I tend to, for example, invest on, or the banks where I have savings accounts, these providers themselves don't actually give as much information as one would hope. So I need to get my information from other parties. So for example, the apps that I have mentioned, and these providers themselves, they don't actually provide information where I believe there could be a huge opportunity to provide very relevant and tailored information to the individual's financial interests, or for example, a portfolio. So that's something that I still see missing quite often. And another point is that I do think that financial information is still sometimes kind of hidden away behind a wall of terminology that for a lot of people might not be as accessible. So over the years, I've developed somewhat of an understanding for most of the terminology, but I do still find myself occasionally getting a bit confused with certain articles or posts. And I feel like I'm missing out on a bit of the information that I could be extracting from the article, just because I might not understand some of the terms that are being used. So I do still think it's being packaged in a bit of a complex manner.
Thank you. I think you're exactly right. I mean, the amount of financial jargon that's out there, acronyms, etc. It's an absolute minefield to navigate through. So I think that's applicable for different generations, across the board. So totally agree. Cool. We've got a question come in from Francesco. It says, is there currently collaboration between influencers and traditional banking / investment channels, or is there untapped opportunity in that space? And what should the collaboration look like, with the goal of creating financial / investment awareness and education targeting Gen Z? We've kind of touched upon this a little bit, but Nicole, Marta, any kind of views on this?
Yeah, I'd be happy to speak to this a bit. We try and do we're definitely not a traditional banking investment platform here at Chip, but we have tried to do quite a bit of what we call rich content in terms of video, in terms of more engaging kind of visuals and things like that. And part of that discussion has been around working with influencers. I think in terms of the traditional banks themselves, I truly believe there is opportunity there, but I think oftentimes the traditional banks, they have such strict regulation that would probably mean excessive control over the creativity of what the content that was able to be produced, which would probably be quite frustrating for the influencers. And I think that also choosing the right influencers to work with is very tricky. Whether that be for regulatory reasons and the other content that influencer puts out, and any sort of agreement you would need about any other content that they could put out in the future that might disagree with the brand, etc. I think there is a little bit of fear and concern there, because you do see these traditional banks work with more traditional. They do talks and they do webinars and these kinds of things, but obviously that isn't the kind of exciting short bite-sized pieces of content that Gen Z would more associate with. I think that a lot of these brands as well, they, from what we've seen, they don't necessarily associate the influencer style to match what they're trying to convey and get across, which I think is a huge missed opportunity. And it goes exactly what you were saying, Ben, around the language used, etc. They have their scripts, they have their content that if you actually get someone to read it out loud, it's painful and nobody wants to listen to that. And so I think that that's a huge blocker to kind of this way of working. And I don't think any of the traditional banking or investment channels, I mean, someone might try it, but I don't see any of them doing it. I see some of the more fintech startup-y, scale-up-y, challenger banks, etc., doing it really, really well and continuing to steal away their business.
Yeah. Cool. Good stuff. And in fact, we'll move on to the next topic, I think, here in terms of technology. So let's move through here. So yeah, Marta, I can hand back to you to talk us about the findings from a technology perspective.
Yeah, so technology has definitely made investing more accessible, has lowered the barriers, and one of the examples is robo-advisors, which are widely adopted by the part of Gen Z that is investing. So there is the attractive, the appealing elements of robo-advisors are the low fees and the small amount that needs to be invested compared to potentially alternative or traditional alternatives, but also obviously the digital offering that integrates really well with Gen Z's digital lifestyles and the ease of use. So adoption of the robo-advisory platforms is not an issue. Approximately two-thirds of Gen Z have adopted robo-advisors among the ones that invest. The problem seems to be retention, especially between ethical explorers and energized entrepreneurs, which are the largest group and the one that is saving more and so potentially can invest more. The reasons that we hear are the cause for them leaving robo-advisors is disappointment with the performance, fees that they thought they were lower or unexpected fees, and the inability to customize their strategy, their investment strategy. So clearly there is a miscommunication. There should be more transparency, especially in terms of customization of the portfolio, to avoid this high churn. And obviously the ability of investing in companies that they know, understand, and that they align with in terms of value is important for these two groups. We didn't show this earlier, but among the criteria that these two ethical explorers and energized entrepreneurs choose when they need to invest in a company is the fact that they're familiar with it. So obviously this is something that with robo-advisors is not always possible. Stretch spenders are the ones least attracted to this platform, and sluggish starters, interestingly, they are the most avid adopters, because they adopt and they don't leave as much as the other ones. And one of the reasons they gave is because they feel that the educational material that they find on these platforms is enough to make them feel they're making a smart investment decision. So there is this self-serving because it's a digital, like they can can learn without having to access other sources. That is important for this group. And this is also the group sluggish starter that has a higher level of distrust for financial advisors. And they find instead that robo-advisors can meet their needs. So this is one part of technology. And the other one is obviously social media. We talked about that. There are a lot of risks, but definitely it also has increased accessibility to information or to investing.
Yeah, absolutely. And in terms of the risks, we haven't covered the deep fakes as well. We've seen Martin Lewis being the most copied or kind of person subject to these types of attacks, due to the credibility he has in the market. So which is interesting. Ben, I'd like to bring you in actually as an ethical explorer. Have you used or in the past, or are you using a robo-advisor? And if so, were you impressed? Have you made a fortune, or what was your kind of experience from using one?
Yeah, so I have encountered them in the past. I haven't used them actively. I am a little bit skeptical when it comes to them, but I have come across them quite frequently. I am not necessarily opposed to them entirely, but no, I cannot say that I have actively used them in the past in my saving habits or when it comes to my finances. No.
Yeah, and it's interesting, Marta. You see, kind of you were saying, thank you, Ben. You were saying, Marta, about the sluggish starters actually quite willing to go with a robo advisor versus a traditional advisor, which is interesting. And is that because it's kind of just takes is that kind of from an ease perspective? It's just quite straightforward to work with a robo advisor, and it's just very accessible. Is that also part of the appeal?
Yeah, definitely. There is that immediacy, that ability to access information without a time lag. So it's a digital platform, and it's something that you can access whenever you want, compared to maybe other more traditional sources. So, yeah.
Cool. And Nicole, to bring you into interested to get your view on this one in terms of how technology has influenced Gen Z's approach to managing their finance. What's your view on this?
I think that there's no longer anybody who's in Gen Z who's impressed by good UX, fast, slick experience. That's now the expectation. I remember when at Chip, some of the features that we launched around instant payments and being able to move money instantly between products and introducing good UI, we had this really great celebratory moment with some of the generation who'd used these traditional products before, where they were like, oh, it's so amazing that I don't have to, mail a piece of paper to my bank just to issue a withdrawal, etc. Whereas in Gen Z and the younger generations below that's just the expectation now. There is no accepting of anything less than that. And so it's really changed the expectations on the product itself that is being used. They're much more likely to find long, drawn-out processes frustrating and annoying, and give up, or just say, oh, it's not worth it. And I think that's also been countered with the difficulty on fraud. So obviously some friction is good friction, and you really have to find that fine line between making it slick and fast and easy, but also not making it so long and painful and having to fill out 3 different forms and send 3 pictures and all of that kind of stuff that they lose interest quite quickly. So I think that side of technology, in terms of the actual digital experience and how good your tech has to be, has become very, very apparent, especially working in the app space, where everything's fitting on a phone screen rather than a full desktop window. So I think that's been a really big influence into what products they use and how they use them, definitely, and a really great advantage to some of the neo-challenger banks and some of the fintech products out there.
Yeah, and from your perspective at Chip and some of the other products you see out in the market that you're competing with, kind of how are you kind of tailoring your products to I guess meet the needs and preferences of Gen Z?
I think, first of all, we've had to kind of redefine the MVP approach. So the minimum viable product approach used to be, is it functional? Great, get it out there. And that's definitely no longer good enough. Being functional, working functionally, but being clunky and being visually unappealing is no longer good enough for people to just say, oh, I'll just use it anyway. So that's kind of changed a little bit. And then I also think like the ability to self-serve has been something that we've had to adopt quite a bit, is letting our customers self-serve the things that they need. We only offer a chat functionality, which is quite controversial to some, but has worked really, really well with Gen Z in terms of their ability to get the information they need and kind of go off and action things themselves, versus sitting on a phone queue for 40 minutes waiting to talk to somebody. That's definitely been tough. And then in terms of the actual experience of using the product, I think we've focused a little bit more on moments of like delight. So things that make you feel good using a product. And I think that if you look into some of the studies around the scroll on things like Instagram and TikTok and why that came about and why that worked so well, it's the experience of how you use something. And so we focus a lot more on little moments throughout the app journey where somebody might, I'm not saying that it'll bring a smile to their face, but they might just feel like that was easy or that was good, and focusing more on those experiences just to make using the product more enjoyable and not just about putting money into a savings or an investing account.
Yeah, makes sense. Cool, good stuff. We've got a couple of minutes left. So the last topic which we'll cover in the last couple of minutes is around the future outlook for opportunities for our financial institutions, but more the future outlook for this particular area. And Nicole, I'm conscious, sorry, Martin, we're running up to time. Should we? Which is the one slide out of these two that we want to cover off? Would you say?
Yeah, definitely the next one. So this one is just because we talked about different needs. So obviously there is a need for different approaches. We're not going to go into to those, but there are a few things that work for everyone. We talked about release saving potential. Elisa mentioned that she's not actively saving; she just keeps her money in cash. That's definitely a potential. It's a common problem among her peers because they maybe don't know where to invest or save or invest in a more profitable way. But also removing those barriers to saving, which we've seen they think they can't afford, and I'm not saying obviously there is also a limit, but there are some analytics and automated solutions that can help save even when they think that actually they can't. And the other one is obviously increasing propensity to invest by having more resources that give them the knowledge and the confidence to invest and that to manage that uncertainty. And all these, it will actually help build trust with financial institutions that in the long term will help build the long relationships with financial institutions.
And do you see the financial institutions starting to act on these points here? Do you see kind of a shift taking place, or is it still a long way to go? What's your view?
Is it me or Nicole? The line just broke, so I don't know.
Oh, sorry. I'm both actually. I'll get your perspective first, Marta, if you want to give your view, and then Nicole.
Yeah, the challengers, fintechs, they're definitely more aware and they're acting because traditional banks, they're catching up. They're still a bit behind. But I think that hopefully research like this gives at least the starting knowledge to understand what are the areas where action should be taken.
I would agree that I think that they are taking some actions, but I think it's always going to be a little bit of a case of too little, too late. They'll always be playing catch up. And so I think what would be more important for them to focus on is the value that they can provide by being a bigger organization and a more established financial account. I think that they would probably very much so struggle with things like gamification and things that are a bit more, have to be tweaked and kind of constantly iterated on just because of their technology and everything like that. So I do think that what they should focus more on is providing really good products that are really scalable, really safe, really great for that, the kind of long term and give choice to the people using them.
Good stuff. Great. Well, guys, I'm conscious we're at the hour, so we'll draw the conversation to a close. But thank you very much for sharing your insights today. So thank you, Nicole. Thank you, Marta. Thank you, Eliza. And thank you, Ben. Really value your time today. And yeah, we'll obviously post a recording of this session onto our website and share this via the Marketer LinkedIn page as well. So thank you, everybody, for joining us, and speak to you soon. Thank you. Bye-bye.
Thank you.
Thanks.
Bye-bye.
Thank you.